What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and we're going to be taking a look at the charts, starting out with the Dow, moving on to the DXY. Also, we're going to be looking at Bitcoin in the macro, just looking at the resistance in the macro on the monthly, weekly, and the daily. And then we'll dig into the 4-hour charts at the end. This is going to be a quick update. Happy Friday. We made it. It is the weekend. Be careful trading on the weekends. As you guys know, we get some crazy volatility some weekends. But there can be a lot of money made on the weekends also. So let's dig in. But before we do, make sure you scroll down, smash that thumbs up. A lot of you have been doing it. A lot of you don't. And I've heard that on the Google TV, people don't know how to do it. Go down to the left-hand bottom of the screen, hit the more action sign, and it'll give you the option to smash the thumbs up. Also, comments on the video help the YouTube algorithm, along with subscribing and ticking that notification bell to make sure you get notified whenever I post updates. All right, let's take a look here. So on the Dow, we've been looking at this hidden bearish divergence, still maintaining the hidden bearish divergence. In the longer term here, we could get one more pump up. That would get us up to probably the 33.2. That would still be the bearish divergence. That would be if it came up and tagged this 33.271 again, this old high. That would give you exaggerated divergence, continuation to the downside. Now, if that does break, the next stop would be this 33.9 to 34,000 point range. I would expect a massive rejection there. And then if we went over to this high, we would still be making hidden bearish divergence. So no matter what, in the macro, this is still looking bearish to me. DXY is getting a nice pump up right now. As you guys know, I'm super bullish on the DXY. I remain super bullish on the DXY, and I know a lot of people are saying the parabola has broken. This is the parabolic trend. It is not broken. I've showed this chart many times. People can draw this however they want, but this is the true parabola. So what I'm looking for is a continuation to the upside. Now, if this does break, then Bitcoin could get another big push to the upside. As you guys know, I'm expecting to possibly see 28,000, but I think we go lower first and make a new low. I've showed you guys that in the Amazon to Bitcoin comparison chart. So let's look at the monthly resistance. Our monthly resistance is the 55 EMA right now, 24,560. Obviously, we're still early in the month, so anything could happen right here, but let's look at the weekly. Our weekly resistance as of right now is this 8 EMA, which we are still getting rejected at about 23.5, right in that area. If we get above this and close the weekly above this, then we may see a continuation up to the upside to see the 25.6 range, 25.7. But all in all, I think we remain bearish. And as you guys know, these are my targets. On the longer term, this up here was a measured move of this rising channel. We broke down, you take that measured move, it hit our target perfectly. And then you go down, take the next break of this little bear flag, and it hit our target absolutely perfectly. And then if we break here, this will be a great time to put in a big short if you're not already in one already. As you guys know, I've been in a short since 24.5. I posted it on Twitter and my Discord. Both of those links are down below. So anyways, looking here, if we do this, as you guys know, I think towards the end of the year, we're going to see this $7,000 to $8,000 range. You can watch my videos from a couple days ago. I go into the more macro and explain it all. But let's get into the smaller time frames right after looking at this. This is also showing 25,000 as major resistance on the weekly. This is the macro, guys. There's no reason to be bullish. That's why we keep an eye on the macro. Of course, you're going to have little pumps and stuff all the way down. We've talked about that for a long time. Also, taking a look at our daily here, as you guys know, our major resistance is this 24.5. Unless we start opening and closing dailies above that, there's no reason to be bullish, in my opinion. I've drawn this in as a possibility of what we may see here. So far, it does seem to be playing out. But remember, one of the things I want to talk about is on the 4-hour, we're going to take a look at something very important. But before we do, make sure you check out Prime XBT if you are interested in trading. Definitely by far my favorite exchange. I don't trade against you like other ones. You can have macro trade or multiple trades in all at once without clumping them all together. Also, you can trade the Dow, Forex, gold, silver, oil, S&P, Dow Jones, pre-markets and post-market. all for free. So definitely check it out. You can use my promo code SAVVY50. That'll get up to a $7,000 bonus. SAVVY25 will get you 25% off of your fees. Now, one more thing, switch back over to the daily, is we had talked about this hidden bearish divergence here, higher highs in the price action, lower highs in the RSI. But again, on the daily, we could get that one more pump up to retest this trend line on the top. That is always a possibility, and we'll talk about where that may get if we do get there. So going back over to our 4-hour chart here, as you can see, this blue line right here was this low right at the bottom of this bear flag, right? That was about 33,000, right at about 33,050, somewhere in that range. We were also expecting a possible test and a bounce there, which we did not get, and we dropped a whole 23% from that level. We never came back up and tested it. So this is going to be important on what's going on right now, right? So let's look at this. We drop down at 23%. We draw another blue line here. We have not broken it yet. That blue line is about 25.3, 25.4. Now, if we get above that, that will break this trend, and then we could possibly be getting up to that 28 to 32,000 range. But as long as we remain below this, this is bearish. If we get above this 25.5 range, then we can start looking at that 28 to 20 or 32 range. Until then, I remain bearish. Now, let's look at where this one is, 17.5. So if we do the same thing as we did up here and up here, we will just blow right through it. And then our target is going to be the measured move here. And it's actually, I think I'll show you in the next chart where this would be if we break through that 17.5. Let's take a look at that right here. So I'm looking at this as a rising broadening wedge. So what we would do there to get our measured move, depending on if, when, and where it breaks. So again, if we break above that 25.5 range, then we can look for the 28 to 32 range. But the measured move of the breakdown here, depending on if, when, and where, of course, would be around the $14,000 to $15,000 range. That's if the 17.5 doesn't hold. So that's what I'm watching for, guys. Make sure you smash those likes. Leave your comments. Let me know what you think. Also, let me know where you're viewing from. I noticed a lot of viewers from a lot of different places. Just curious to where you're all from. Make sure you subscribe if you haven't. If you want these daily updates, make sure you share these videos if you find them helpful. And I will see you in the next one. Don't forget to tick your notification bell also. Take it easy, guys. I'm out.